Taiwan Semiconductor Manufacturing Company. That is today's video. It's currently up 133% this year with a market cap of $550.95 billion and PE ratio of 31.31. It's down from its 52-week high of $142.2 a share, but up from its 52-week low pretty significantly of about $40 per share. Its CEO is C.C. Wei. Definitely pronounced that wrong, or my bad if I pronounced that wrong again. It was founded on February 21st, 1987 in Taiwan. It does about 1.33 trillion Taiwanese dollars, which is equal to about 47.95 billion US dollars. For today's video, all the fundamentals will be in US dollars to make it easier. They're a semiconductor manufacturing company, and their market share is really incredible, especially amongst its Taiwanese competitors, and we'll take a look at that. It is trading on the New York Stock Exchange under the ticker symbol TSM. Now, over the past 6 months, it's up a whopping 20.96%, despite the global chip shortage and a bunch of other things going on in the world. It's a very nice return, while many other stocks, such as AMD, have traded flat over the past few months. Over the past day, it's up 1.36%, currently trading today, as of this video, at 117.35 US dollars. It also has a dividend of 1.51%, giving you income investors out there a nice little return if you consider investing in this company. This is the TSMC. Is it set for success? Let's find out in this video. The TSM stock analysis. I'm your host, David Scheuer, and this is StockerFinance. Twitter.com/StockerFinance for more information. The newsletter link will be below. It's a once-per-month newsletter if you want to subscribe to that as well. Let's start off with the fundamentals of this company and really just decide whether this company is in a healthy financial situation before we even look at a lot of the news and all of the future outlook for this company's, whether as well as the broader market, including the chip shortage issue that's, significantly affecting this company. So first off, we'll go ahead and just look at net revenue. If we look at gross profit here, they are in a very healthy obviously they're going to be down slightly from Q4, but a year-over-year basis, they are up about 18.61%. Quarter over quarter, they are down slightly. Their total operating expenses have increased 21% year-over-year. If we go ahead and look at their net income, however, it is up 19.4% year-over-year. We're not seeing insane growth, but again, this is a $500 billion company. I know I've done a lot of AMD videos, which is a much smaller company than this, and you're seeing just immense, 100% growth year over year. This is not going to be that type of investment. This is a much steadier investment, definitely a very long-term investment. But from just a standpoint, if you can just from a quick scan of the sheet here, just the income statement here, you can already tell they are in a very healthy financial situation, but they do have room for improvement and growth moving forward. So if we go ahead and look at their cash flow here, net cash generated by operating activities is, that's pretty nice, about $8 billion there. If we look at Q1 2020, it did a $200 billion, that's not in the United States currency. Sometimes I get it mixed up. You see USD and then you see NTD. So yeah, it gets a little confusing sometimes on the sheets. Make sure to just look at USD. They don't always convert everything on these sheets to US dollars. Just keep that in mind here. But this quarter, they did about $8 billion in cash flow generated by operating activities. That's great. Now, net cash used in investing activities, they had a loss of about $8.7 billion. Cash and cash equivalents, $23.6 billion at the end of last quarter, which is Q1 2021. For a $550 billion company, I would expect more cash on hand. However, they are investing heavily, and we're going to take a look at that in their future, especially into the United States, building more factories, including one in Arizona, which is underway. Let's go ahead and look at their consolidated balance sheet here. And again, they're in a pretty healthy financial situation here. Total assets of $102.4 billion. $550 billion company with $102 billion in total assets. That's not too worrying. If we look at their shareholders' equity here, it is at $68 billion. That's a good sign, with $34 billion only in total liabilities. I wish I could convert the rest of it from the previous years to see if that is growing or not. I could do it a little bit in my head. And one thing we do see, if we look at shareholders' equity and NTD, it is growing to 1.9 trillion, up from 1.8 trillion previously. And I'm saying trillion because it's an NTD and not USD. That's why, by the way. Let's move on here, though. So let's talk about the industry and economy. And, we've already decided that they're in a healthy financial position. They are growing. Their shareholders' equity is growing, which means they're in a they're improving on their assets versus their liabilities. They're cutting down their liabilities and expenses, or at least their debt situation, while they are building up their assets. They could use a little more cash on hand. For that large of a market cap, I would expect more than about, 27 billion in cash. But it's nothing too worrying at all. Again, their net income is healthy and their revenue continues to grow as well, despite a global chip shortage. Let's look at the industry and economy, though. They have the largest market share in the global semiconductor manufacturing industry. And if we go ahead and look at this chart, you can see they have 28% compared to their competitors. One of the more known competitors, Samsung, there at only 10%, UMC 13%, SMIC at 11%. So yeah, TSMC is one of the market share they own and continue to take is just absolutely incredible here. And if we look at if we look at the more industry and we talk about this chip shortage I mentioned previously, and has really been in the news a lot, let's take a look at what their chairman has to say about this. And it really has to do with the automotive industry as well. This is a global supply chain issue. Now, the world's biggest contract chip manufacturer, TSMC's chairman, Mark Liu, was present at the annual General Assembly of the Taiwan Semiconductor Industry Association as the chairman of the organization, and told reporters, "We believe currently the total production capacity is still bigger than real market demand," as quoted. He said, "The reasons of the current global chip shortage were more to do with imbalances and uncertainty in the supply chain and not the lack of capacity itself." He pointed out three main causes of the global chip crunch: the COVID-19 effect on the semiconductor production, the unpredictability and uncertainties due to US-China trade war, and the accelerated digital transformation have been brought about by the pandemic. I absolutely agree with that. That's really good news to know, though, that it's not an issue with their company necessarily. It's simply an issue with the broader global market, creating this supply chain issue, as well as some other political factors coming into play. And keep in mind, the US-China trade war directly affects Taiwan because of how connected Taiwan is to the Chinese government. Now, the upshot was Huawei's rivals scrambled to fill the market share it left, and in order to meet the expected rising demand, they have placed extra orders for chip. Above that, U.S. export control triggered uncertainties, made the electronics manufacturers, especially the Chinese ones, to secure their chip supply by stockpiling, and this led to a so-called double booking effect, meaning many companies in the industry are holding more chips on their shelves than they actually need to use, simply due to the fact that they're scared. So what this means, guys, is they're saying, okay, we're worried that there could be a massive chip shortage, so instead of just using what we normally use, we're going to double book, we're going to stock up on tons of chips. And that was creating some of this problem. Was these companies were taking so much of the chips away from the global market that it was creating this kind of weird chip shortage, even if there actually isn't a chip shortage. So TSMC tries to resolve the situation by determining which orders are really urgent and renegotiate the schedules on existing contracts in order to rank up the most pressing ones. It could help since TSMC is determining market power and the influence on the industry. Its market share accounts for more than half of the global foundry market. Renegotiation free up renegotiation free up chip production capacity for the car manufacturers on line with the Taiwanese government request to the domestic chip suppliers to ease the burden on the auto industry. The auto industry, since almost all cars are electric right now, they all use chips, in case you guys didn't know that, and they have a huge, especially with the electric vehicle market right now growing so rapidly, the chip production, as we've seen with Tesla's, the chip shortage has really affected their business. And it's creating a huge global issue within the auto industry. So TMC is renegotiating and freeing up chip production for car manufacturers specifically. And I bet this is going to allow them to raise prices as well, which will allow them to increase their revenue and probably increase their bottom line and their margins. Now, whether this is true, we'll have to see, especially next quarter, and I'm interested to see that. But yeah, I wouldn't be surprised if that's the case, and if they're able to do that simply because there's such a shortage of chips, even if there actually isn't necessarily a shortage of chips, just because so many people are stockpiling them in case of a worry due to political factors and whatnot. Now, nevertheless, TSMC's chairman has pointed out the production capacity in the chip manufacturing industry is exceeding the real market demand. The company recently announced a paramount $100 billion investment in research and development and to expand production capacity over the next 3 years. And we're going to talk a little bit more about that expansion into production capacity, or expanding their production capacity significantly, especially in the US market over the next few years. They already put aside a record amount of $28 billion capital expenditure for 2021 fiscal year. Now, TSMC's placement of capital in research and development and expansion easily outbids Intel's $20 billion investment. The American chip giant plans to spend the money for building 2 new chip manufacturing plants in Arizona as it re-enters the contract chip manufacturing business. The move was backed by the U.S. government with bipartisan support as the U.S. tries to regain the lead in advanced chip manufacturing. Since the U.S.-China trade dispute has unfolded, the world's 2 biggest economies and Europe are investing heavily in their own semiconductor production supply chain. And that is good for TSMC's business, especially if they're able to have factories all across the world. Now, their European factories, which I'll talk about in a little bit here, unless I've already touched on it, don't believe I have, though, are kind of on hold. They're not really too sure if they want to build factories in Europe. Maybe there's some political factors at play there, but in the US, it is definitely going through. As you can see, they have bipartisan support. On the other news, on a more economic scale here, the new Taiwan dollar, the NTD, compared to the USD, the United States dollar, has been increasing in power, which is very good for their overall economy and the business. Now, this isn't the biggest point in the world, but it is a pretty good factor here. Now, let's look at the growth and the future of TSMC. So TSMC is ramping up output for the automotive MCUs. And this article here, just to reference it, TSMC has disclosed it is ramping up its output for automotive microcontrollers for 2021, which will be 60% higher than in 2020. Now, TSMC has taken unprecedented actions to help auto vendors, including the rescheduling of production capacity demanded by customers and other sectors who have also seen their supplies constrained. And this is the Taiwan-based foundry indicated that. Now, TSMC will continue to work with auto supply chain to deal with the current chip shortage, as the foundry stated. They also are ramping up in the U.S. chip investment. I already talked about this a little bit, though, so we don't need to touch on that too much. But they are planning on building 6 new manufacturing facilities throughout the United States, and one is going to be in Arizona. So it plans to set up shop in Arizona, which is in the United States, obviously, and as part of its global expansion endeavor. However, we again don't know whether they're going to expand into Europe or not. They kind of put that on hold, but we'll see in the next quarterly report, or in just some of their more their announcements coming in the future, whether they do that expansion as well, which would be huge for a company that has so much market share already. On top of that, Biden signed an executive order which incentivized manufacturers to actually shift their operations to the United States. And I haven't looked too deeply into that order, but maybe part of that was not shifting to other parts of the world. But again, that's just me kind of taking a guess there. Maybe they had it behind, the closed doors deal. But again, I can't say for sure if that's the case. Now let's look at a little overview here going into the future. So Taiwan Semiconductor Manufacturing, they plan to channelize incremental billions of dollars into the Arizona chip factories. This is from their direct plans. They also remain indifferent regarding European plants, as I stated. Now, last year, they announced an investment of $10 and $12 billion in the Phoenix chip factory. The company now plans around 5 additional fabs in Arizona, apart from the current one. Opinions remain divided over the next plant, which is focused between the advanced 3-nanometer chip making technology and the slower, less efficient 5-nanometer technology, which is used for the first factory. The 3-nanometer plant could cost between $23 billion and $25 billion, and they could definitely join the likes of Intel, possibly Samsung, to seek subsidies from the U.S. government, which I, without a doubt, expect them to receive significant subsidies, or if not subsidies, I do expect them to receive a lot of tax incentives as well for moving chips or just building factories in the United States, which will inevitably create lots of jobs and help lower the United States unemployment, which is currently at around 6%, still pretty high from above. I believe it was about 4% previously before COVID hit, and now it's really it's kind of flatlined actually and stopped decreasing over the past few months. Although the jobless claims, at least the weekly jobless claims, have continued to decrease, which is a great sign for the U.S. economy. But creating more jobs in the U.S. is always good, especially from a politician standpoint. Them announcing, saying they're creating new jobs, always, gets them more votes and likability. So I wouldn't be surprised if this company, when it builds more factories, gets lots of subsidies or more incentives as it continues to build factories throughout Arizona and the United States as a whole. Now let's look at the growth outlook raised here. On top of that, semiconductor might be able to take a challenging situation between nations, turn it into a net positive for the company and its stakeholders. In light of this, the company recently hiked its revenue growth outlook for 2021 and 20% as in dollar terms. That represents a marked improvement compared to the previous forecast of mid-teens. That's great as well. We also saw AMD improve its guidance to 37%, I believe, to over 50%, which was incredible as well. So overall, the chip industry is growing really fast, actually faster than I even expected it to to grow, especially with the growth of electric vehicles as a whole. And just, I mean, think about it. Every electronic needs chips these days. So it's really no surprise as we become a more electrified economy that there's going to be more need and demand for chips and semiconductors and all of the rest of the stuff here. Now, on top of that, they do a plan to invest $100 billion over 3 years. Now, in my summary here of this company, it's worth $550.95 billion, so half a trillion US dollars. PE ratio of 31.31. Nothing too worrying there for its PE ratio compared to its competitors in the semiconductor industry. It is down from its 52-week high, but again, it's seen over 100% over the past year. It really didn't get hit by the coronavirus at all. Its stock price didn't. It also has a dividend of 1.51%. In terms of being a healthy company, this is a very healthy and, in my opinion, relatively safe investment. It is a foreign company, so you have to keep that in mind with the US and China relations, especially. That's probably one of the larger risks at stake here. However, with Biden really pushing to expand the United States in terms of, trying to get us back on our feet, get us really growing again, since we've kind of stagnated over the past year or so, especially with coronavirus just hitting us so hard in our economy. I wouldn't be surprised if they received lots of subsidies and lots of tax incentives. Who knows what else they could receive for building those factories, and that'll improve their bottom line significantly as well. So yeah, as an investor in this company, full disclosure, I am bullish on the company long term. Is it going to be a short-term gain? We see some crazy 100% growth over the next few months? No, not at all. However, the chip shortage is not as big of an issue according to their chairman, and I agree with that statement full-heartedly. And yeah, I fully expect this company to keep growing into the future, especially with just the global chip market and semiconductor market growing as well. So yeah, and I don't think this is a, crazy, risky investment by any means. I think it's a rather safe investment, and it's a rather safe growth investment with a nice dividend as well. So at the end of the day, even if it's not growing, at the rate of return I would like, we're also seeing a 1.51% dividend, creating some income there. So yeah, in my opinion, this company is going to continue to grow, especially with expansion into Arizona with those, 5 factories. Going to create thousands of jobs there, and also it's going to be able to raise its bottom margin since it will no longer, since it will have a huge market in the United States to start shipping its chips to, and on top of that, it'll probably improve its margins as well, having a direct manufacturing plant in the United States. They're ramping up production significantly. That'll improve their revenue and their net income as a whole. So yeah, good things for TSM. I'm looking forward to following this company. Anyways, thanks for watching. Please subscribe for more videos as well. Twitter.com/StockerFinance for more information. Check out these videos as well. And the newsletter link will be in the description below. It's once per month. If you want to subscribe to that, it'd be awesome.